What's up, guys? What's going on? Let me turn off one of these mics. How's everybody doing? Give everyone a second to join. Good evening, good afternoon. It is 12:05 p.m. New York time on Thursday, May 13th. Just pop the chat out. You guys can hear me all right? Pop out chat. Let's make sure you guys can hear me nice and clearly. And then we'll get the stream started. Yeah, I went with the, I mean, it's popping up, right? Can you see my face? Let's move my box. So we're not next to the, do we want to go top left or bottom left? Let's go bottom left. There we go. Hear me great. Thank you. Oh, that's nice. Nice, Cryptic. I'm glad you were able to treat yourself to dinner with those earnings. Yeah, we'll give away some Bitcoin for the stream as well. Same as the last one. Okay. Got a bunch of people familiar with. I am just chilling. I have a little bit of time today between entertaining out-of-town family members. So I had complete plans for this week and vacation. And things happen. So all right. So now I'm entertaining aunts and uncles. Ripcord, X Factor, Arian, what's up? What's up, David? Athlete. Cool. So everyone can hear me. Good. Let's see, how many people we have watching? We have a good amount of people watching. Healthy looking stream. All right. Move this over. Yeah, so clearly we're going to talk briefly about the Elon Musk bullshit. But all right, so thank you for tuning in. For those of you that are first-time viewers, my name is Ryan, also known as Cantor and Clark. Went with the webcam today. I got my LASIK, but I was wearing glasses for like a month, and I just kind of looked like a bum. I really looked like a bum or a serial killer, or a combination of both. But for those of you that are tuning in for the first time, my name is Ryan, also known as Cantor and Clark on Twitter. My partner is Josh Rager on Twitter. We are the co-founders of BlockRoots. Just as a reminder, none of this is to be taken as financial advice. This is strictly for entertainment purposes only. I try to keep it entertaining. I try to keep it light, sometimes crass. This is definitely not a stream that is, I would say, suitable for children. Although I would love for you guys to share what I think is good educational content. One, I don't think you should be teaching your children how to trade just yet. Although there's an argument for that being a really valuable skill, right? Because whenever I was younger, I didn't really learn anything that was valuable financial wise from my parents. Put it that way. I learned how to be a really hard worker from my father, but they weren't like financially savvy. Grandparents were very much, but my parents were not like financially savvy in terms of markets. All right. So yes, this is for adults. All right. So none of this is to be taken as financial advice. Before we get started, want to thank our sponsors, Phemex. All right. So not only our sponsors, but we've been partners with Phemex now for over a year. So they are a contract, spot, and they also offer yield generating platform right now. They're the fastest crypto exchange. So what do I mean by fastest? All right, so their matching engine matches 300,000 transactions per second. So everyone is familiar with what happens during extremely volatile times. You have engines go down, you have exchanges go down. Think of BitMEX, right? How many times did the BitMEX error pop up enough that it became a meme, right? So Phemex doesn't have any downtime. They are the fastest crypto exchange. They are making their way up in terms of liquidity. But if you want to sign up for the exchange, all right, I think it's a great exchange. A lot of these newer pairs are now available, so they're going to be offering all of the newer DeFi pairs. So as you can see, they added SNX, they added GRT, they added Aave, they added Uni, they added Sushi. great exchange, right? Great exchange for trading both spot and contracts, so perpetual swaps for these newer DeFi pairs. If you use the link below, Phemex.trade, you will get access to whatever kind of promotional feature they're running. If you don't get something, just hit me up. I'll make sure you do. I have a lot of pull, all right? So all jokes aside. Yeah, so we're going to talk about BTC, obviously. We're going to focus on Bitcoin. We're going to focus on Ethereum. I'll take questions. You know how this normally goes. No, it's, yep, at Rager. All right, so some of my friends are in. That is good. Sound is good. All right, all right. No, that's not Joshnomics. Sound is really low. I'll put this up a little bit. There's on your speaker, there's a button. It's a plus sign and a minus sign. Just make sure you hit the plus sign. But yeah, we're gonna talk a little bit about everything. I think, and I'll make sure I can see the chat while I'm doing this. Oh, before we get into it, make sure you hit that like button. We got a lot of viewers right now. We do want to get the likes up. We have been kind of laying off the YouTube. I know that, and it's actually pissed some other people off. We have some of our followers that say, hey, guys, your YouTube should be a lot bigger than it is. With I would say the amount of time that I've been trading, the amount of time that Josh's been trading, I think the non-sensational approach we have to the YouTube, the knowledge we have to offer, our track record, yeah, I know that it could really probably benefit a lot of people if we were to consistently hit the YouTube constantly, but it's very hard to hit the YouTube constantly, not only when you have, as I had this past week now, family, death in the family, but also when the market is this volatile, and it's been in a range, but it's been excellent to trade, there are certain priorities, right? And we probably will pump out a lot more educational content in the bear market. That's just the way that it is, right? If you are a YouTuber, you're probably not a trader, all right? So that's why I can't really take a lot of the YouTubers seriously, because it's all just based around, support and resistance, and that's it. You just buy it when it flips and don't really offer anything beyond that. So I apologize for us not hitting the YouTube as much as we should have, but we really appreciate the likes because we do want to grow this. All right, so let me just go through the comments really quickly, make sure that no one is bringing anything up that he wants to go over immediately. Not to step in on the shill, but I've been so impressed with FTX during the many flash crashes of late. Well, that's great, Arian. Like, we don't, we're partners with Phemex, but I'm the first person to tell you that there are a lot of options out there, and FTX is a great exchange. I don't use Phemex for all of my trading, right? I'm spread out across almost every exchange. Okay? So just being completely transparent and honest with you, I trade on FTX, I trade on Bybit, I trade on Deribit. All right? Deribit's probably the only one that I don't want to get too far into because, how I'm able to trade on Deribit is to remain a secret. But I trade across multiple exchanges. I'm trying to think if there's any others. I was trading on Bybit, but I took my money off of Bybit. But I don't know. Maybe I got a little bit spooked keeping a lot of money on Bybit and not being KYC'd. And maybe I'll be back on Bybit. So, FTX, all praise to them. Great exchange. Sam is a not only a phenomenal trader, but for the brains behind the exchange and the face behind the exchange, he's an awesome public figure. For him to interact with people on Twitter, I don't want to say like if you're a billionaire, you shouldn't interact with people that are below you constantly, but it's not often that you see that. So put it that way. Some guy who's worth billions of dollars taking the time out of his day to talk with us. So I think that is awesome. All right. Cool. Sound is good. Yeah, style TA. Yeah, it's not TA. I wouldn't call this TA. Technical analysis is like, it's such a generic term, right? We're technically trading, but I wouldn't call it technical analysis. So I don't have an FTX referral, but if you go on, if you look at Twitter and you go for a basic search of, if you go, the start chat button is right on top of your face. All right, let me move my face. If you go on Twitter, you could find somewhere there'll be a referral somewhere. All right, let's get it started. So as far as BTC, first things first, Elon Musk. I don't trust Elon Musk. You have guys like Pompliano coming on this morning on CNBC saying and kind of leaning on and sort of relying on pretty heavily Elon Musk's word, right? That he's not going to sell Bitcoin. I don't trust the guy, right? I think he's kind of a cowboy. I think his only concern is Tesla and SpaceX, right? And all of his companies. Okay, I don't trust him with Bitcoin whatsoever. I think he finds a lot of satisfaction in having a material impact on this market. I almost think that it's kind of it's a way of stroking his own ego. So I don't trust Elon. I'm really happy that he brought a ton of attention to Bitcoin and the crypto market as a whole. He took a bunch of supply off the market. That is always great for something that has a fixed cap supply, right? And it's great because it's Bitcoin, right? Most of us were brought into this space by BTC. Not to say that Bitcoin can't be flipped at some point, but I don't necessarily trust him. Okay, some interesting things taking place with some exchange wallets yesterday before the announcement, before the tweet. So I don't know what to make of that. What I will say, and just to get to the point really quickly, the whole reasoning is a thing that that I kind of, I don't know, it bothers me. So it's one thing to be dumb, it's another thing to act dumb, especially when you are, it's already so obvious in a very public manner how intelligent you are, how cerebral Elon Musk is. Like, nothing escapes him. So for him to suddenly come out and say that, they're concerned with Bitcoin and how that has an effect on the environment in terms of emissions, I just find that kind of hard to believe that he just figured that out, right? So I feel like his hand was forced. Who knows? But I don't really want to focus too much on the guy. He does have a big pull. This is definitely not something that is a positive for Bitcoin. It's a negative for sure, because you have a whole bunch of people that they are really partisan in, that whole subject of something being green and the environment. That is something that divides a lot of people. Okay, so it's a dangerous line to cross or to really to flirt with, because you have a lot of really public figures, celebrities, for example, that they have these platforms and this exposure, and if Bitcoin even suddenly starts to really pick up, I think, steam in gaining more hate publicly, it's just not a good thing, right? I feel like this is being more complicated about something that is really obvious, right? So this is not a good thing. We can't sit here and try to after the dump, try to spin this. It's not a good thing. This is a bad thing for Bitcoin. All right. And we saw that in price action. Let's get to price, because I don't really care to talk about that too much. All right. So as far as BTC goes, it's still within a higher time frame range, right? But still within a range, but looking ugly. Okay. So let's just point out some key levels really quickly. So highest weekly close, which is right around 60. All right, this daily level and weekly level at right around 59. So we'll zoom out and you'll see that daily high now is right around 59. This whole area was an area that served as a very significant resistance. We had that move up, and then this was the move that led to a break in market structure. So we have a series of higher highs, higher lows, right? Break in market structure, first lower high. Okay. Now, there are people that are right now just kind of unwilling to maybe entertain the idea that Bitcoin doesn't put in a new all-time high, in the next week, right? As hard as that is to believe. Then there are people that also are unwilling to accept or entertain the idea that maybe Bitcoin won't put an all-time high in this year. I don't like to get too tied into any kind of firm belief. I try to just change with the market. All right, consult the market for the market. So this 59, so my level for sort of gas pedal longs, as I mentioned, was above 61. All right, so that's why I was willing to hedge up here. So if you follow my Twitter, I got in a hedge, I got out of a hedge, and then the night before this nuke, I said why I got in a hedge again. All right, so 61 was a really good area because to have an invalidation for any kind of hedge or short, because this was the area where you could really go, I think, balls to the wall long. I think it's lower now. So, 61 was, so for example, we have 61, we have 61, 167 as that daily close, just this general area, right? As if we broke above that level, I would think we would really have sent it. I think it's a little bit lower now. Like I think now after this significant move down, if we're back above 59, I think that 61 level has moved down, right? So if by somehow we're able to reclaim this entire structure, trade back above 59, then I would be just as bullish as I would have earlier within the structure if we broke above 61. So that level has just kind of shifted by about $2,000. Now, it doesn't necessarily look like that is our first order of business. I mean, the bullish thing that I can say right now, or one thing that we can say that is bullish, excuse me, it's not bullish. It's rather, it's an area where we could expect a bounce, maybe a little bit of consolidation, and maybe this would be an area where we could mean revert slightly. This 20 period weekly, which finally has caught up to us and we've caught up to it. So 20 period weekly moving average, I'm on the daily right now, but that's the line you're looking at right here. That's an area where I said, again, in a really strong trend, you could see that this would probably be systematically bid. First response back down to this level, you're going to see that there's going to be some buying presence. I don't think that we were expecting either way that if we met it, we would leave it abruptly, like come down to it and then rip up. Either way, this level would be an area where I would expect more price action to develop. So if we're able to hold this 20, right, we're showing strength in price action, we're able to hold this low over here, then yeah, I would in the short term, I would be looking slightly higher. All right. I don't know if you could, I don't think you could just lean on that though. I don't think we could just say like, all right, so this is the visit of the 20 and this is an area where, yeah, everyone wants to get in on a strong trend. Don't want to just lean on that. This is something that you just add for confluence. Okay. So we're sitting above it right now. Just to point out some other higher time frame things before we get into the nitty gritty. This is something I'm concerned about, right? We're looking at, one second. Nope, not that. So this, forget the purple and the black line. Purple line is the prior monthly VWAP. Black line is the prior weekly. So we'll get rid of those. I do like to have those on the chart. So what I have right here is your yearly VWAP. All right, so yearly VWAP. Okay, so where has, since the beginning of the year, most of the risk averaged in at? All right, so, clearly this has been a very violent trend most of the way up. All right, most of the aggressiveness towards the highs. This has been a continued upward trend. You have a series of higher highs and higher lows. Your yearly VWAP is going to always, it's going to be below you in that case. A return back to it, we've already done that once. Okay, now that we're kind of hanging around it, I've went over this before. The best way that you could think of this is the VWAP, which is a volume weighted average price, is where most of the risk has been averaged around for the time period that you're looking at. So we're looking at the yearly VWAP, right? So this goes back to the beginning of this year. Where was, on average, most of Bitcoin bought? Where was most of the volume done? Where was most of Bitcoin bought and sold, right? Where was the greatest exchange on average over this yearly period? Okay. Or rather just where is the average based on that yearly setting? So if we're losing a higher time frame VWAP, that just begins to look really ugly, right? Most of the risk being put on here, as far as I'm concerned, it's, even if you just consider this one for one activity, right? Buyers and sellers coming together. When you are below the VWAP, right? Buyers have lost control. Okay. Think about anyone who's purchased above VWAP. All right. They're no longer in a favorable position. So this is normally something that I don't really look at on the yearly. It's not too often that you're concerned with the yearly VWAP. You normally look at this on the daily. You look at this the weekly VWAP. I look at the 3-day VWAP. Where in shorter term trends, right, lower time frame trends, where has most of the risk been put on? It's the same kind of concept as looking at a footprint, right? So this is a yearly VWAP. This is not something I normally put on the chart because it's not something normally that you're going to be dealing with. So now that we're starting to flirt with it and potentially lose it, I will, get concerned because, again, most of the risk. So think about most of the buying and selling on average since the beginning of the year is right around this 50K level. So again, sellers would be in a better position than buyers in this case, right? Buyers, you know, just think about it like this: all the buyers that helped become part of this average, right, or create this average, you know, you're trading below their entry points. That's that's the only way you need to think about it, right? If I put on risk, when I say put on risk, I just mean open a position, right? So where has most of the market opened positions? Okay, so if we're below that point, you know, there's a lot of people that are in trouble, right? So the yearly VWAP, the fact that we're, you know, hanging out around here now, and that's not necessarily the worst thing. If we start losing this, it just becomes more of an indication that this is not bullish right now, right? Bulls are not in control, which I know that a lot of people are kind of unwilling to accept. You have to be willing to flip, right? I flip all the time, all the time. My hedge back here. So, you know, I'm done looking at this, but we'll go to just my hedge, for example. I must have flipped this thing on and off, right? So I was hedged, I was unhedged, and then I said this is at 12:30 in the morning on May 12th. I said, I don't know, maybe I'm no fun. I got out and back into my Bitcoin hedge. My own exploration of shitcoins is messing with my head. So one of the reasons is froth. So too much froth. I want to go to bed with no major portfolio risk. And I was still going to keep my 61K break hedge removal plan intact, meaning if we broke above 61K, I would remove the hedge at that point. It was just too much of a nice area to have to define a position in this case. So right now, the more important levels that we're dealing with, okay, I think is right around 53. We'll start just with structure. So I think your kind of gas pedal, I like to use this term now, gas pedal level is 59, right? So why is that? Well, on the way up, see a series of higher highs and higher lows, right? Broke the structure now, lower low, lower high. So if we're saying that the context and rather the structure of this is changing, it's an indication of what is taking place between buyers and sellers, right? That this trend is shifting. Then now a lot of how we define that is hinged around this high, right? This lower high, okay, which is now back under this significant resistance. Yes, it's still within a larger range, right? But in terms of the trend, we're moving sideways, we're consolidating. If we are to say that this is going to be invalidated, right? If we're going to say that this is changing or has changed, now we have to be back above 59. So have the 59 level indicated. The local trend on the way up, right? You could hear my cat in the other room. This 53 level was the significant low that we would have wanted to maintain if we were going to say that this structure remained bullish. All right, so we've taken that out, and now that should act as resistance. That's a daily level. You're going to have daily time frame sellers. The fact that you break market structure on the higher time frame means that you bring in a whole different type of participants. We've gone over this many times before. You know, on this chart, these 5-minute time frame levels, they're only really bringing in a certain amount of people, right? Scalpers, lower time frame momentum traders, but your positional traders, your swing traders, your higher time frame traders, they don't care about that chart. They want to look at the 4-hour, the daily, the 12-hour. They're not really concerned with what takes place in the lower time frame. Everyone focuses their attention on this when the daily structure and weekly structure starts breaking, right? So when we start losing levels, even if we're still within a higher time frame range, right? It's just showing, okay, this is either progress or it's either advance or it's decline. All right. So another level to point out, these two daily levels right here, label them as red. Okay. So this was one of the higher lows right here. You can see that back in at the end of April, that served when we lost it as resistance. All right. Have this consolidation break up, started treating the base of this previous consolidation as support. Things looked good. You most bullish cases when you, after breaking down like this, start treating the high of this as support, and you don't, you make a much stronger move, and you don't have to worry about, treating the previous support as support. You want to break through as many levels as possible, obviously, like that goes without saying. So now we have that daily level that is currently acting as resistance again. So again, just more evidence and its initial resistance. More evidence right now that this thing has begun to shift. Without even getting into price action, one thing that you should always keep in mind, all right, and this is sort of one of the cardinal rules of macro traders, is when bullish news stops having an impact on price and bearish news starts having an impact on price. So for example, Tom Brady, no impact on price, right? All the positive developments that have actually come out in the last couple of weeks, no impact on price. The one thing that was confusing, and I said this many times, was there was plenty of spot leads up throughout this structure. Big spot leads, right? It began to shift towards the end, but that big spot lead, it really makes you wonder, right? But other than that, there was no follow through off of positive news, whereas any kind of negative development led to a negative response in price. This is when things are beginning to shift. These are the kind of signs that you need to pay attention to, you know, as I've said, the canaries in the coal mine. So this daily level that's at the previous daily level that's at 51,259, I don't want to say that that is, you know, that's the resistance now. What you can always expect, right, when you lose a daily level, when you gain a daily level, for the daily, for the weekly, you know, for the higher time frame levels, is when you break the level and you retest it, I almost want to say you can guarantee, all right, that you'll have a response at the first return to that level. So this is like one of the things that I think is worth touching on. For all the traders that talk about, and I'm not talking about, you know, you have prolific support and resistance traders that are phenomenal, and that's one of the main things that they lean on. Trader Main, Crypto Cred, Cold-Blooded Chiller. I'm trying to think of a few other guys that trade at SR. Everyone trades SR, but who are well known for it, right? One of the things that you should be doing is building a journal so that you can actually say things like, well, I've back tested enough and I could see that first returns back to daily or weekly levels after they've broken. Actually, they offer, you know, 80% of the time they offer a meaningful response of 1 ATR, right? So meaning, you know, whatever the average true range of the daily is, you know, typically the response off of that daily or weekly or significant level, the first response off of that will yield that kind of result. And a lot of times you will see that you could start adding these strategies and trades to your, you know, arsenal of tools. So this acting as resistance, I don't want to say that, yeah, now it's resistance and that's the biggest resistance on the chart. It's not. You know, it was expected that it would act as resistance the first go around. I think that this structure currently is, you know, as we can see, sitting between a rock and a hard place. This level right here is the lowest weekly close locally and the lowest daily close locally. All right, so we can see that this is your pivot on the weekly. So we have a series of higher highs. This is kind of where it gets muddy up here, but this is a higher low in the weekly right here. Okay. This is where things really begin. It's very obvious that things were consolidating. If you look at the monthly structure, we've already gone over that ad nauseum on all the streams. But this daily level right now and weekly level, we're finding balance between these 2 points. Okay. As far as what I expect, one thing I want to point out, there is kind of a similarity between this structure and a structure we've had at the end of April. And then I'm going to go into the TPO charts. So structure at the end of April. All right, where this is the midpoint of April, not the mid, it's 18th and 19th, where you have a big liquidation structure. All right, and we'll go to the TPOs. You'll see how this is actually, the current structure we have is a little bit better than this one. So big single print tail, bunch of excess, explore that, putting in lower highs. It looks like it's kind of going to just flag off and break down. And then price managed to catch its footing at around the halfway point and break up slightly higher, not entirely covering that gap. So what I expect is that the gap, so this is an inefficiency, right? Market has like no friction on the way down. It's kind of a vacuum. If this occurs in the beginning of a bullish structure, I'm very much going to lean on this trade being high probability from low to high, right? Towards the tail end of a structure that is losing momentum, you know, I wouldn't say that you can lean on or guarantee that you're going to cover the gap, right? Like you could in the beginning of a bullish structure. And this is where sort of Bayesian probability comes in, you know. All right, so now we're 3 months into a consolidation. What's the likelihood that this breakdown gets covered completely in a bullish move? Well, I'd say it's less likely if we've gone this far and we haven't had, bullish continuation. So where we are currently, kind of a similar structure, right? Big liquidation structure, a lot of volume done. All right, response, there's your high. This might be that lower high. We're talking about, the similarity between the last two. This is where things are slightly better than that previous fractal. So where we might be getting something like this, right? But I think that 53 is probably where I'm going to be looking to sell. All right, so I'll look at the TPOs and just give you an idea of what I'm talking about. Your higher time, just really quickly, your higher time frame levels based on the daily immediately, if you're just going on daily, are that 51 259 level that we've already tapped as resistance. Hold on. Fucking dry mouth. It's like the kombucha soda, whatever this is. The tea makes my mouth dry. The tannins, right? 53 264 is the next daily level. I don't know if you necessarily get all the way up there, right? Who knows? We'll play it by ear, though. That's the point. I'm playing this now level to level. So if we look at the TPO, so what makes this a more attractive TPO, all right, than that April 18th, April 19th structure? So one, this is a lot of imbalance, right? So this is your excess tail, okay? So what this TPO is showing you, right? Remember, this is a 30-minute chart. So if you look at a 30-minute chart, you could find tails, you could find single prints on just a 30-minute candle chart. It's where nothing interrupted that spot. So this is your tail, all right? This is where we're in balance today, okay? So far, the high of this tail, they are single prints, but it's part of a tail, so you wouldn't call them single prints the same way you would call these single prints. The high of this is acting as resistance, right? Now, what that means to me is this high of today is probably a really good trigger. So from 51.3, all right, to this next level at 52.5. Now, what you'll see is that these single prints will act as resistance on the way back up, right? I'm almost certain of this acting as resistance. Now, this structure is attractive, though, in the interim as maybe being a candidate or a higher probability candidate for a lower time frame bottom, right? Why is that? Because we have single prints, right? First big rejection, never going to expect that to hold on its own. There's always follow through. So this occurred afternoon during my New York session. I continued to sell, even though there was this big response, because I just figured when we pass the ball to Asia, they're going to sell too. So, half the world's not awake yet, right? Do you think that they're going to save the day? Unlikely. And it's very unlikely that you have a big structure like this that just continues to move up from there, unless it's the first big dump after a really bullish move that's been sustained, but not where we are now. You're going to probably have multiple tests at that area. The second test of today, though, is another set of single prints. So when you're looking at TPOs, where is the market accepted? Where has it been rejected? Most immediately, clearly we've been accepted right here between 49 and 51. Clearly we've been rejected again below those prior single prints. I don't even know why I try to draw that. I don't even make it somewhat accurate. Below those prior single prints, we've again had another excess put in. So it looks like we're rejecting this area, and we've made it all the way down to 44.5. So I think that this could be an interim bottom, and I will look for that trade above, what did I say, around 51. I think that it's a high probability that you don't have to wait for the high to break, so 51.3. I think this ledge is good. So that ledge, that anomaly in the structure, a lot of the times if we break above a ledge like that, I'll look to get involved off that alone. You have poor highs right here. Okay, so poor highs within the structure. So immediately, if you're looking at a TPO like this, my first targets to get involved would probably be that high alone. So to repair that. But I think that if you repair that, you gain acceptance back within this area, and you go from 51.2 up to, again, like I said, I'm going to start looking at 52.5 to start unloading. All right, that's if we get that, clearly. 52.5, even though it goes back all the way up to that daily level, which is right around that 53.5 area. Whatever it specifically is, we should probably find that out rather than being vague, which is 53.264, so right in the middle. So it happens to be that the daily level is right in the middle of these single prints. And if you're looking back at a TPO and you're trying to find out, what areas are going to reject, what areas are going to accept, when you gain acceptance back into the meat of the structure, you could expect sort of this rotational behavior where it resumes a very friendly trading environment. It's going to chop, but it's liquid. It's been an area where price has been accepted before. Single prints, these levels within the chart, these are just low. Just consider them as if you're looking at a volume profile. It is it's an area where price did not spend much time. Right, price buyers and sellers really didn't do any business, whether they wanted to or not, doesn't matter. It would likely act as resistance on the way back up. And the same can be said if, let's say, that we break above this imbalance. So if we break above 53.5, when we're back within, if we're back within this value area of that prior day, immediate targets I'm looking at are 55.5, and then this naked point of control right around 57, right? But we have it's like we can continue to talk about what pit stops we're going to stop out above us, and you could just continue to add to that. But I think we have to deal with the most immediate levels right now. Not a lot of volume transacted down here, so it's not like I think we're in a position to have a ton of trapped traders at the low. We don't have it yet, because if we had a ton of volume down here, you probably would have squeezed already. So a lot of this trade really hinges on what I think is traders getting offside right within this range. So if we look at how this range is developing, and this is really low time frame, so I'm not going to use this. But if I zoom out, maybe it'd be a good idea. Let me just, I'll put this on the 5 minutes so you guys can see. Otherwise, it's not going to go back as many bars. Just give it a sec. Maybe not. We'll come back to that. 1 sec. And I'm going to get to some other charts. Just kind of drilling on BTC. Are we back? Okay. So the thing about this is open interest is not really, there's no major spike in open interest. So what we're expecting is hopefully someone to get offside and lead to a squeeze upward. Otherwise, it looks like what we would have, or what we're kind of relying on now, is spot to show up again. It's not like we have any kind of offside positioning down here. I mean, if we put on, the CVD, we have the CVD down here. You have a slight divergence. Okay, let me just change the color of this. Actually, you know what I'll do? I'll go to, because rather than change my settings, I could just use this. Spot CVD, regular CVD on Bybit. You are seeing, so from just a left to right translation. All right, so we have kind of a range bound structure, right? Within that, you saw that value area between, this is very balanced so far. So 49.4 and 50,800. If we just put this on real quick, 50,000. Hey, what's up, kitty? I don't know if you guys heard my cat. So pretty balanced, right? But the CVD is continuing to trend down. Now Bybit, I don't know. This is a little bit more skewed, and I think a little bit less reliable than, as I've said plenty of times before, BitMEX. And even though you have this behavior on the CVD, if we look at open interest, it's really just going down. And even if we just isolate that to Bybit, so we don't include all of the longer dated futures contracts that might be being sold still, to short without funding, it's not like, here we go, hold on. So open interest is just continuing to, let me just get rid of this, sorry guys. So one thing to point out, I won't even point that out because I'm going to explain it in a second. Open interest is going down across this range. So it's not like, a bunch of people are getting caught off sides, which is kind of like what you would want for a really violent trap to set up. It doesn't look to be that case. It looks like longs are stopped out, getting, forcefully, or taking themselves out of position. If we look at BitMEX, not a whole lot to make of that CVD. So this is this is what I'm kind of relying on right now. I'm relying on this daily level at 49.1 to hold, and seeing if we could get some type of mean reversion, because this is a pretty big day in terms of standard deviation moves down. Let me just go through the chat really quickly, see if anyone has any questions. One point to touch on before that. We'll go to futures data, Bitcoin funding. So a lot of the times, one of the things what are you doing? Kitten. She's still a kitten, so she's super curious, put it that way. A lot of the times, one of the things we lean on when we're looking at, when we're within a range and we are coming back to lows, ideally you don't want to come back to them consistently, right, or continually, because it doesn't look like it's going to be a range that breaks up. What we look for is absorption, right? We look for absorption. We look for a spot presence to show up. We look for offside positioning by shorts, and some of that might be incorporating. Well, part of that is incorporating a CVD. Part of that is incorporating basis, and then funding, which is a derivative of basis, right? So, normally within this trend, at the lows, we're looking for one, support to hold, price action to be strong to some degree, however you're determining that. It is a bit subjective, but showing up in strength and price action, and maybe something like, for example, negative funding, right? Negative funding, meaning that there are longs being paid at this point to open up positions. Shorts are opening up a lot more positions in mass, and they have to pay a interest rate component to do that, or to maintain that position. So there's an incentive to long, there's an incentive for shorts to close out, and that's an indication of positioning as a whole. Yesterday, you had a false alarm. All right, and if you don't know how the underlying market works, how underlying market structure works, market microstructure, then you probably wouldn't be aware that Coinbase was completely out of whack. So Coinbase is an oracle, which means that it's one of, I think, 5 or 6 exchanges that that help make the index price for the derivative contracts to be trading around. Now, Coinbase had a $1,500 spread at some points, which is just absolutely astronomical. I mean, it's a 3% spread. You have it in altcoins, put it that way. You have less of a spread in altcoins most of the time. So Coinbase was trading extremely out of whack, and it made the funding rate predicted go very negative in a very quick amount of time. So it looked like there was a lot of traders getting caught offside. This was after much of the low was put in. So what you could have done is say, well, this is a good signal to get long, had you not understood why we were coming to that value to begin with. If you weren't paying attention to the fact that Coinbase was just absolutely losing it. So that's not something that I want to really incorporate moving forward for this local area within structure, meaning I'm not going to be looking at, let me go back to my other chart, because this one you can't change the size of it. So this little blip right here is not something that I'm going to even incorporate into my into what I perceive as confluence for any kind of setup. Like, for example, I'm not looking at this saying, well, we have this, negative funding, that's a good sign. I don't think so. As you can see, almost immediately off of the low, things kind of recovered to the positive side, right? Not recovered, but I think you understand what I'm saying. We went back to being positive, which is not what you want to see at the low. We don't have right now a spot lead, all right? So, for example, Bybit is trading at 172, Coinbase is trading at 133, all right? FTX perp is 168, FTX USD is 103. All right, that's hopping around a lot. See, look how much this is jumping right now. Spreads, they blow out at bottoms. You don't want to call it too early, though. So that's one thing to consider. I don't think that you want to lean on that. Just if anyone is looking at that as maybe fuel to add to their long thesis right here, I would take it with a grain of salt. Now let's go back to the chat and take some questions. Look at some other charts as well. So yeah, Ross, one thing, I went right to your sentence in the chat. That's one thing that I'm like really confused about, right? So I closed out my shorts, I closed out my hedges, because we're at the 20 period weekly. I think we're going to chop around here. Even if we drop another $1,000, I don't think we're going to just continually drop to 40, low 40s. One thing that's kind of the elephant in the room that I'm really not, I don't know what to make of is Zuckerberg's Max and Bitcoin goats. Like anyone who has half a brain sees that as Bitcoin Maxi. And if you remember what happened before Elon publicly came out that he bought Bitcoin, Tesla bought Bitcoin, he alluded to it, right? I think he just changed it in his profile. So I just find that really confusing for what my belief is for the near term. That's why I want to just fall back on levels. Like this is one thing. Like I don't I like to, do what everyone else does and romanticize, but at the end of the day, I'm still going to trade my levels. I will say that maybe that could be the one thing that could repair this chart. I do think that there's probably a 60% chance that the top is in for 2020. Doesn't mean I think that, I would say if we put in a new high, it's Q3, Q4. And it's kind of what I said originally going back a month ago, but when things when we had this strong move off of the lows and spot was showing up again, I was thinking, oh, maybe we're just going to rip up again. Like ETH is going crazy. Why not? And then this comes out and there's nothing you can do, right? So I think that we have some time ahead of us before we see new highs with Bitcoin. That's on its own though, without any kind of announcement by Zuckerberg. Facebook is a massive company. Tom Brady coming out with laser eyes is not important. What are you doing down there? Talking to the cat. But taking supply off the market meaningfully and then telling the rest of the world that you've done that, I think that is very meaningful from a company like Facebook and whatever they plan to maybe integrate around crypto. So we'll see. Okay. Someone with a shill. All right. Amazing. Cool. Miss Isabella sounds really talented. I invest with Amelia Isabel. 20% commission on profit. That's terrible. 2 and 20 models are done. Especially since most funds are I know that's just a fucking bot or something, but 2 and 20 models are kind of crap since most funds are returning beta anyway. Amelia is a known scammer, dude. Can you talk about liquidity crisis that happened on Coinbase? I don't think you wanted to take advantage of it. I think when you see something like that, what you should do if you're a newer trader is not touch the leverage, right? Stay in spot. I don't know what is up with why Coinbase had a $1,500 spread at times. Let's just go to Coinbase's chart and show how ugly things got. And if we go on the 1 minute, you could see it. But I think just look at that. That's disgusting. Let's go on the 5 second, even better. I don't know if we could get all the way back that far. Let's test trading view. Oh my God, look at that. That's like a one sat altcoin in 2018. I mean, that is just insane. If you want, there are tools that you guys have access to. You maybe don't realize. If you want to see like very refined levels of activity, and you're not using a footprint chart, and you're not using one of the order flow platforms, if you have a trading view, use your 1 second chart. What you can see specifically for each one of these are 5 seconds. I don't trust it to go back 1 second. I think I'll just barely make it for the loading of the previous bars. But you could see what took place in that very small increments of time. So you can see where liquidity just fell apart. And bottoms do happen like this, but I just, you can't say, oh, all right, spreads are blown out. That's the bottom. No, you want to have obviously a basket of things that really line up to indicate that. 1 sec, guys. Just gonna go to something real quick. All right. So yeah, let's go back to the chat. Then I'm gonna go over ETH. Aftab, I appreciate it. I don't even think like those scammers are real. I think they're just bots. Um, yeah, I'll block them. Williams, Smith, trying to steal from Will Smith. Um, all right, so um, no, VPVR is not the same. TPO is time based. So TPO was um, when volume wasn't reconciled until the end of the day, and they used to consider TPO boxes the indication of volume. The fact that we spent a lot of time in an area made traders think that there was a lot of volume transacted there. Excuse me, not made them think like they're dumb. That's how they actually looked at the market when TPOs were being used. Time price opportunity. So, AFTAB, just to answer your question, what we're seeing in a TPO chart is how price has been distributed throughout the day, right? We see where it was rejected, where it was accepted, where most of the activity took place in the value area. So 70% of the activity took place. Whether it was balanced or imbalanced, we get an immediate idea of what context is. There is a lot more to it than this, but originally TPOs were used to say, all right, each one of these boxes represents volume. This, at the end of the day, right here, meant most of the volume was done here and none of the volume was done here. All right, so this is where the market was rejected. This is where it was accepted. You have different types of distributions, balanced distributions, imbalanced distributions, double distributions, trending days. You can immediately see this on the by using TPO. There's a lot more nuance to it. I'm not going to go into it in the stream. We do have a course at blockroots.com. I don't want to shill it. You could use YouTube and get a phenomenal education for free also. So, but originally TPO was used and perceived as volume because we didn't have the luxury of knowing what the volume was throughout the day. Like right now, I could tell you on Coinbase, like, in the last, let's say, for example, 5-second candle, only 3 Bitcoins were traded. I immediately know that, right? In the 1980s, maybe even early 1990s, volume wasn't reconciled to the end of the day. So they used to look at this chart and say that that was volume. This is the actual volume profile. What you really want to see, right, and that's why these two together are most important, is that the volume confirms the price, the time. So we spent the most amount of time up here and we also transacted the most amount of volume. What you could take advantage of are disconnects between that. Let's say that most of your time was up here, none of the volume is transacted up here, most of the volume is transacted down here, no time was down here. Well, then this looks like a big trap, right? All these traders are caught off sides. You could do this, there's obviously a lot more to it, confirming the trend, making sure that the volume profile confirms the trending profile in the TPO, but it's a very useful tool. It's not a strategy, it's just a tool. It organizes all of the data. So X Factor, really quick. Here's what I think, and I've said this a long time ago, and you say a lot when you're talking about the higher time frame. It's why my spot BTC, I have a really good cost basis. I'm not going to be selling it yet. I do the same thing everyone else does though, and I sort of prognosticate, pontificate, whichever word it is. I can't think of which P word it is now, as to what the future is going to be, right? What's going to happen in the higher time frame in the next couple months. It's so hard to really say that with any level of accuracy. That's why I trade mostly the low time frames and I keep my spot exposure, which is essentially just a long position in swing trades, right? I think, and it's fun to do this from time to time, I think that this back here, I don't want to say this because, all right, so let me give you my opinion. This, I think, without the pandemic, was going on. So this kind of, after a really long trend, you're going to have a long consolidation, distribution. There's cycles within cycles, right? The market has, a macro trend, an intermediate trend, a micro trend. So even though we're in this big cycle, you have these mini cycles within it. I think that ultimately, before the 2020 Black Swan, that we were setting up to do something like this. I think absent of that, and you can't say that because that happened. Future's path dependent. There's nothing we could do about that. But I think you could say that without this kind of aberration, crazy anomaly, that we were probably going to go on to base above this level and put in a structure like this and maybe be where we are now without all that. I know a lot of people like to say that this helped propel it, but I don't think that Bitcoin wasn't going to make new highs without that. I think that it was growing as an asset either way and would have accrued and would have, gained more attention regardless. There's a couple of things you could have looked at just to come to that conclusion either way. So this kind of structure might be something like this. Now, with this structure, it took, up to the March point, from breakdown of that consolidation, you're looking at 1, 2, 3. Whoa, no, I'm hopping a lot of months there. 1, 2, 3, 4, 5 months. That's a long time. This back here doesn't have any kind of institutional adoption, right? No, nothing compared to what we have now. So there's a strong case that you could make for if this consolidation was to break down and range a little bit longer, that from a probabilistic standpoint, that this one would be the one in a sample of, let's say that just a sample of those two, knowing the given conditions, which one would recover faster, I'd say that this one would, right? But there's no guarantee. Still, though, we're within a range, right? That is the first weekly high, low, locally rather, matching up with the monthly structure as well. So as far as I'm concerned, and I've said many times before, this was a micro range, this was a micro range, and this was before all this occurred, but that is all within a much larger range, right? So this 45 level is the low of this range, my opinion. Probably one of the most important areas within market structure below us. It's the daily, it is the weekly, and it is also the monthly. Okay. So a lot, I think, rests on that 45 level. Now, what that means is it doesn't mean it's going to be impenetrable. Like, you shouldn't break 45. It means that you could probably expect another low to develop here if we get that far. I would be concerned if we started breaking below and really showing no signs of absorption below there. But that remains to be seen. What you don't do is start getting yourself, you can't say like right now, like this is what I'm going to look for exactly at the break of that low. I don't know. We'll see as it develops. What I do know is that when the low breaks, you don't say that it's done in the first 5 minutes, the first hour, the first 4 hours, none of that. You could violate this low and completely recover it. So we'll see as we get down there. I think we're either way, guys. Just to be clear with what I think we're visiting that level again. So I don't think that the market is anymore in a place to do this. Unless Mark Zuckerberg comes out and says something, I don't think that that's going to happen. And now, so the whole argument recently, so this no longer looks like that last fractal, was ETH's strength. ETH it's a step away from being parabolic. It's almost parabolic, right? The major levels for ETH, you don't have any on the weekly until you go all the way down to the 2000 area, right? Don't have that on the weekly until you go down there. Don't have it on the daily until you go down to 25. This daily low right here, as I said the other day, I think you could flush that and see a recovery within that previous daily cluster. But we'll see. A lot of there was a lot of shit talking by people who are very one-sided in this market. Either you're ETH maxi or BTC maxi. I really don't care. I do like to make fun of people who are very one-sided, right? I just find it really silly. The whole market as a whole is really small. $2 trillion market, whatever. I don't care. That's a market cap of Apple, right? I don't even remember if that's the market cap of Apple. Maybe Apple's slightly more, slightly less. But I don't think that ETH is just going to continue to move on from here without Bitcoin. If you look at it this morning off of the low, one of the things that I really like to do immediately after a breakdown, so we'll go back to the low. So just get right at it. And now let's put on ETH. Okay, ETH is underperforming right now. So the strength that ETH had, high beta initially, yes, trading above, What the hell is that? Sounds like a bird. Must be a cat toy. Um, this this response immediately out of the low is expected. It was, it's higher beta. It's going to recover to the upside more. But now look, it's losing to the downside. So it seems like it's just falling right back in line with being being the riskier play, right? And not just, and we've always known that, but not necessarily being like the new Bitcoin and now it's going to hold up while Bitcoin crashes. I don't think so. There's no way that happens. Not no way, but it's very unlikely that that happens. All right. So let's go back to the chat. All right. Oh, why I exited Ray and actually re-entered Ray. So I didn't say that this morning, but we'll go over that in a second. Where did the chat go? Before I go into Ray, I want to make sure that I don't... one sec. So Ray. Okay. My mental health, I don't really care that much, honestly. I think you get that by growing to a certain point in your, I think just your trading account, not being overly committed to anything, having a system. I had the benefit of really only slightly dabbling in shitcoins, so I'm not this, like, this is how I feel about trading. I feel like when I'm consistently trading Bitcoin, if I just decide to consistently trade Bitcoin and even ETH now, then I could make all the money that I could make if I dabbled in shitcoins. And then I always realize when I get involved in shitcoins, I have a couple big wins and it's like, wow, you don't do anything for this. You're riding momentum. But at the end of the day, if I just continued to keep my head down and go hard when the time calls for it in BTC and ETH, I just make the same amount of money anyway. So I didn't get hurt that bad because there are a lot of people that are like overexposed in altcoins. So when something like this happens, I make a few clicks and that's it. And my shitcoin, my dog coins, I didn't have the major one. I remember the name of it, Shiba or whatever. But I had Shinu. I don't know. I had one. I had a couple shitty coins like nudes. I don't even think I could get out of nudes. Don't get in nudes, guys, because I'm not trying to use your liquidity exit. I don't think I could exit. But it's such an insignificant position. So I don't really have an issue with this mentally because I don't know. I never put myself in that bad of a position. It's a bird. What's up, Stan? What's up, buddy? Whoa, you just read my comment. Whoa, you just read it again. Okay. So let's look at Rune. Let's look at Ray. Yeah, MicroStrategy just bought $271 in Bitcoin. Yeah, I could buy $271 in Bitcoin too, MicroStrategy. So they're like turning over couch cushions now to buy Bitcoin. 270 Bitcoin. Sorry, I said $700 or whatever I said. Who knows? So as far as Ray goes, I exited Ray when we started breaking below this breaking below this level. Now, here's the thing. I wouldn't normally do that. I would normally wait for, a daily close or a higher time frame close, but it just happened to be that Bitcoin was losing its shit. So I figured Ray is absolutely going to lose its shit. There's no way it's going to hold up. It hasn't been. I'm playing Ray because one, it was such a sound technical level. It was holding for the time being, and I figured it would be a laggard. If it is a laggard moving up and Bitcoin starts moving down and everything starts moving down, it's not going to suddenly start being strong, right? So this was kind of a no-brainer to exit. I re-entered though, so we'll see. I think that Bitcoin ends up finding a short-term bottom soon. I think that Ray ends up finding a short-term bottom soon, and we get some mean reversion back up to this 12 level. So we'll see. But Bitcoin right now isn't looking too good. So Rune, Aave is another one that's a ton of strength, but I think things can feel a ton of strength in the short term. I mean, look like they have a ton of strength in the short term, but then at some point when Bitcoin's just relentlessly selling, everyone bows. As far as Rune goes, this is one that I didn't do it yet. I want to get a meaningful position in. As you can see, it's kind of doing the thing that SRM was doing. It's kind of doing the thing, even though Rune has been much stronger, that Ray was doing, where it's spending a lot of time at this support now. So this should have been it. And this for a lot of people probably was it. Oh my God, that's a sign of strength. Took out that low, retested, you know, third tap of the high where you should be moving up. Everything is really overextended when you think about it. Like we're really not being patient with what we consider consolidations with some of these alts. There is a lot of new money in these too with really bad cost basis, and those people like to get out at break even. So once you start trading back up to their level, they exit. That's why it's good to know where the VWAP is, where most of the risk was put on. So, yeah. But as far as a higher time frame trend goes, I mean, if you look at Rune, because I like to use this for alts, 20 period moving average still acting as support. 4-hour moving average, excuse me, that's the daily. 20 period on the daily. 20 period on the 4-hour just lost again. But the daily chart is probably the most important one to me for alts, for the trend. So, but do we think that this continues to hold up? Well, we'll see. In my experience, nothing escapes Bitcoin's wrath. Only short term it does. I don't think it's a dump right now. I don't think it's a dump. If anything, you know, after leaving this kind of single print, this is showing that the market was rejected here, but it's likely that even during this single print, it's likely that when you have an excess tail, that at some point, looks like a sperm, at some point you're going to come down here and clean it up a little bit. This is excess. All right, that's imbalance the same way single prints are too in its own way. You're not usually going to see something like an excess tail get left behind. So make no mistake, even though I'm saying this is a setup, it wasn't that and then up. It's that and then some point come back down here. Because again, I don't see that, I haven't done it in a really long time, leave a low like this without exploring it again. And just look back here. So we shall see. I'm not worried right now though. Doesn't look like it doesn't really look like dumping. Still though, that spot is not showing up the same. This spooked the market for sure. This is not insignificant, as I said earlier. Okay. How far into this are we? About an hour. Go through some of these questions again. BNB, yeah, I'll take a look at BNB. Then probably going to wrap it up, guys. Why should we expect resistance to get through the upper single prints on the TPO but clean up the lower single prints? So we're talking about, where are these? So that is the target. So I wouldn't expect it. I'm not saying to expect it that it's going to go through it all. If anything, it's the resistance. As far as the low single prints go, you know, technically this is single prints. This is called excess. Again, this is good to see. It's good to see. The market has rejected, buyers have rejected any kind of advance. But what you want is excess or a tail that looks more like, here, just something like this, a healthy looking tail. Healthy looking tail, healthy looking high. All right, healthier looking tail. Nah, it's kind of imbalanced. You got that little ledge. Look at these tails compared to these tails. These are excess amount of tail, put it that way. It's very likely that you clean it up a little bit. So whether that looks something like, hold on one sec. Can you see the candles? turn the, you know what I could do? Hold on. Whether it looks something like this, coming down here again and testing those lows again. Because what happens is this becomes a major, so one sec. This low becomes a really defining area in the chart for a lot of people. It's like, okay, that was a big dump, but as long as this low holds, right? So what happens is, as soon as we start to go into this low again, you get a lot of people really dumping and puking their positions. It's another chance to catch a lot of traders offsides. So whether or not you create a new low, we don't know, right? Whether or not we create a new area of single prints or we just kind of clean this up slightly, we'll see. This right now is not worrisome to me. But when I say that, just keep in mind, the chart looks like shit now. I'm just saying locally that this is not as worrisome. What's more important is that where we're at right now, where the market is kind of really spooked and dumping on bad news, and up to this point momentum is drying up and we lower high in the making. Like, the chart does not look good. If you were to say, hey, sir, can you give me your unbiased opinion of what this chart's going to do? I'm not going to tell you what it is, though. And you showed me this chart right now on the weekly, I would probably be saying, and just being dead honest, this is absent of any kind of sense of urgency by institutions or anything, right? Who knows, right? But I would be looking at this from a technical standpoint and saying, yeah, we're probably coming down there. So the thing that has stopped us from getting to in technical levels to this point that would arguably be good technical levels to expect returns to has been, sense of urgency in the spot market to bid up all these opportunities. Sense of urgency is no longer there. So we'll see. Like I said, there's a lot of unknown right now because, and maybe it's not, maybe we're just being romantic with this Zuckerberg and his goats. Why'd you have to name your goats Bitcoin and Max, man? That's not arbitrary, is it? So, yeah. So one of the things about profile is how exaggerated is something. So if we're looking at a profile, and let's just say we look at this one in isolation. All right. A poor high, you would normally, so when I'm using profile, just intraday, just profile in general, all I'm doing is picking out areas where I'm looking to get involved. Okay, do we have anything right away? All right, so we have a poor high so far. We have these single prints that are local to us. There is this ledge combined with this poor high. That allows me to say, all right, so probably breaking above that ledge has meaningful follow through rather than waiting for the day's high to break. Okay, so I have a trade set up that is a little bit before today's high. I think it could overthrow today's high. All right, these are single, this is a poor high, but it's not an exaggerated poor high. So if we're looking at two profiles next to each other and we had a high that was like that and a high that's like this, I'm definitely going with this one being more likely to get cleaned up than this one. What I'm saying is things that are exaggerated, the benefit of the profile is it shows you really stark imbalances. Where it's not a clean distribution, where something really stands out. Well, this is a tail, yeah, it's a rejection, but man, that's excess. That is not a normal distribution. Yes, we're balanced up here, that's right, but this is not a normal distribution whatsoever. So it just gives you an idea of what stands out and what is smooth. And I guess that's the best way I could put it. Smooth distribution versus what is kind of janky. And that's one thing that during the day when you're using profiles, while you don't want to start to try to figure out, you can't say you shouldn't want to do this, but you don't want to go down the route of just trying to always assume what kind of profile is going to develop. What you can see is though, all right, so we're halfway through the day and we have a really poor high. All right, so odds are we're cleaning up this high before the end of the day, right? Or if you have a really ugly profile in the middle of the day that's like, I don't know, something that broke down but looks like a crazy Tetris piece, and I mean it has a lot of imbalances. All right, so we're probably going to fill this out. If we're showing absorption at the lows, we're probably going to come back and clean that profile a little bit, as they call it, the repairman. So the point of that drawing is things that stand out are what we should focus on. So for example, a profile like this, nice profile, right? Poor high though, but pretty nice profile. Poor high, pretty nice profile. Normal variation. These are better profiles, right? Double distribution, sort of. Pretty balanced, right? But poor high. But things that are really ugly, you want to keep an eye on. All right, guys. I think that does it, though. So like the other stream, I'm going to give away $300 in Bitcoin in the stream. So after the video is loaded, leave a comment. Tell me what you think. Give us some feedback. And yeah, thanks for tuning in. Until next time, everyone have a fantastic weekend because that's when I'll be coming back. Take care, guys.